Good morning everyone and welcome to my morning report analysis videos on Wednesday the 13th of February with me, Richard Perry, market analyst at Hantec Markets. We've got a pretty positive look to markets today. Again, we've seen gains on equity markets. That came as Wall Street jumped overnight and futures are positive in early morning today. Now, two factors behind this. First of all, that the Democrats and Republicans have sort of come to an agreement or a tentative agreement that could mean that the US government does not engage in another shutdown, but also suggestions that the US-China trade negotiations are progressing, and Trump seems to be sort of leaning towards the possibility of an extension to the deadline, which would presumably be on the pretense that they are coming towards a deal. So that would be a positive as well, and certainly markets have jumped on the back of that. You can see equities all strong. And look at the S&P 500 yesterday, breaking out to levels not seen since early December, and all pretty looking good. Now, what we see that in that situation is the dollar sliding back. Now, that you can see that where the yuan, the Chinese yuan, strengthened yesterday and into today, and that certainly has sort of been one of the reasons why we've seen that US dollar coming back off the highs. There's sort of a move away from the safe havens. We've seen the yen underperforming today and across the board on the forex majors, and generally speaking the dollar has been a bit of a slip as well, and that has, as I said, sort of been linked to the fact that increased risk appetite tends to come through with a dollar weakening effect, certainly when with regards to progress in the China trade agreement potentially for the US. So that seems to be the position we're in today. A little bit of consolidation, you could argue, but euro back above 113 big figure, holding above that 113 big figure is a key moment if that can continue. Sterling back sort of rallying yesterday as well. But also what we've seen is the Kiwi dollar. Big sharp move to the upside on the Kiwi dollar. That came on the back of the Reserve Bank of New Zealand this morning, which held rates steady at 1.75%, but more importantly they sort of maintained a fairly neutral sort of outlook, and the market had been sort of fearful that it could be turning a little bit more dovish in its outlook. Now sort of maintained a fairly neutral stance, so subsequently the Kiwi dollar has jumped strongly on the back of that. Oil price % higher, and again that sort of plays into the whole risk appetite improvement angle as well. So some decent moves, but uncertain, a bit of a consolidation on euro and sterling, but certainly on the commodity currencies we're all looking fairly positive. Now sterling has just ticked a bit under the flat line today. We've seen the UK inflation data, which came out and showed that UK inflation has dropped to a 2-year low on the sorry, where's my number? 2-year low on the CPI, the headline CPI 2-year low. Now let me show you the chart on that. 2-year low there, and we can see that that yellow line is now back to levels not seen since January 2017, so 2-year low there, and you can see the core data holding at 1.9%, but still underneath the 2% target now for the Bank of England. So that's on the headline. Although you could argue still pretty positive read through for the economy, considering the spending power that the consumer would have, with average earnings still above 3%, so more than 1% in terms of real earnings growth now. And in terms of what we're looking out for the rest of the day, well, that leads us on to US inflation this afternoon at 1:30. You've got the US inflation numbers, and they are expected to show again sharp moves to the downside on the headline to 1.5% in the US from 1.9, but again core inflation still holding up fairly well, 2.1% on the expected core CPI. We've also got weekly crude stocks, and that's expected to show an inventory build of 2.8 million barrels at 3:30, that data point. Now, in terms of my chart of the day, Euro Canadian, you've seen the oil price jumping over 1% today, and that should be positive for the Canadian dollar, and it tends to be the case where we've seen in the recent few weeks where the oil price has been in recovery mode. The Canadian dollar has been a decent performer of the forex majors, and against the euro, certainly that little downtrend channel has been consistent, and you've got the momentum indicators which are all negatively configured. RSI failing around 50, moving towards the low, sort of the mid 30s. Stochastics also negatively configured, just having crossed lower. But the thing I like about this chart are the Fibonacci levels. You've got the fib levels that have time and time again caught the rallies and seen the market rolling over. 38.2%, then 50%, then 61.8%, and coming back to the support of the 76.4% fib level. So a breach of that 76.4% fib really does open the way towards a full retracement back to 4760 area within that downtrend channel, and then that on a move clear of that fib level at 76.4 to the downside, that would become a basis of resistance again. So any sort of rallies, I think, within this downtrend channel are a chance to sell, but you'd be looking out for what I'm expecting to be a downside break. Now 49.50 has been the support in the last sort of week or so. It's been holding again today, but the negative configuration suggests that on the hourly chart that any unwinding move on the RSI is a chance to sell. So it certainly looks as though you've got the a test of that 49.50 is going to continue. You've got resistance coming in initially around that 50 mark, really. $150.15 being that reaction high from yesterday, and then above that 150.55. So a couple of levels for you to work with there, but certainly it looks like the market is sort of positioning for a downside break. So wish you good luck in your trading today, and I will speak to you later.